how to move money from India to Dubai legally, how to qualify for golden visa through investments, how to navigate the process smoothly when the investment size is big, how to make big corporate investments and what is required to be declared and what is not, how Government of India classifies Indian origin nationals, and you must know who you are. Indian ambitions are going global and Indian capital is making its mark globally. Where is it heading? Straight to Dubai. But why? Because Dubai is the wealth multiplier and Indians are smart investors. Therefore, for Indian investors, the question is not where to invest. It's how to invest and bring investments to Dubai. Hello everyone, my name is Archana, a senior property consultant at Xperiencerealty. I decided to come up with this topic because recently I was approached by a lot of investors who are facing legal issues and are confused on the subject. A lot of this is happening because either the good consultants are hard to find and can be expensive, or sometimes the ones available do not have the experience needed to help. This only adds to the confusion and results in mistakes. Clients want to know how to move money from India to Dubai legally. They want to understand the process to move large funds or manage small investments, be it individual or corporate. How to make investments through LRS and how to navigate the process smoothly when the investment size is big. They want guidance on how to invest and manage while living in India. How to qualify for golden visa through investments. How inheritance or gifting works. How does taxation, financing and remittance look like? How to make big corporate investments and what is required to be declared and what is not. As an Indian law graduate and a professional real estate consultant based in Dubai with over 11 years of experience, I have tried to put all of this together in one video after consulting the best chartered accountants, financial advisors, people in banking sector, government institutions, and also some big business houses. This subject becomes more clear when we understand how Government of India classifies Indian origin nationals into different categories to ensure their financial freedom, and you must know who you are. Government of India has classified Indian citizens into three major categories. Number 1, ROR, a citizen who stays in India for more than 182 days in one financial year or stays in India for more than 365 days over last 4 years and has been a resident in India for at least 2 out of last 10 years and has stayed in India for 730 days or more in the last 7 years. Means you can go for holidays and stay months with your families outside India, but if the above conditions are met, you are still considered as a resident and ordinarily resident, ROR. To make it simple, majority of our citizens fall in this ROR category. Second category is NRI. An individual who stays in India for less than 182 days in a financial year is NRI. Mostly expats who work and live in other countries but still hold Indian passports come in this NRI category. The third category is RNOR. A resident who does not meet the above comes in this category. He or she fails the 2 out of 10 years or 730 days in 7 years criteria. To make it easier, anyone not fulfilling the additional conditions of ROR status and also failing to meet the NRI criteria comes in this category. All the above nationals, while investing outside India, come under different taxation laws and have different investment limits imposed by RBI. Since now you understand all the categories, I will explain the tax implications on all these categories. Tax implications for resident and ordinary resident. RORs are taxed on their worldwide income, which includes all income earned both in India and abroad, whether it's capital gains, rental income, or any type of income. Foreign rental incomes are taxed with standard 30% deduction, and if any interest is paid on borrowed capital, that can be claimed as a deduction subject to filing the income tax returns. Foreign capital gains are fully taxable in India under the head capital gains. The tax rate depends on whether the gain is short-term or long-term, with benefits available for long-term gains on certain assets. India has the DTAA treaties, so if the ROR is investing into a country where he is being taxed on the rental or the capital gain, that tax can be credited against the income tax liability. Means total payable tax minus the foreign tax is the net tax you must pay to the government of India. Dubai does not tax capital gains or rental income. Since no tax is paid in Dubai, no DTAA credit applies, and hence the entire taxation is managed in India after deductions. It is also important to tell you that the taxation comes into picture only at the time of repatriation, when you send profits back to India. If the money is reinvested, the taxation during that time is delayed till the time money is sent back to India. This is how the taxation looked for ROR category, and now let me explain the RNOR category taxation. Resident but not ordinary resident are taxed on income earned or received in India and income from a business controlled in or a profession set up in India. Foreign capital gains and foreign rental incomes are not taxable in India unless the gains are received in India or linked to an Indian business or profession. Which means in the ROR category, most foreign rental income and capital gains are exempt from Indian tax, as they typically do not meet the criteria for being taxed in India. For example, if an RNOR earns 10 lakh rupees in rental income from a Dubai property and does not receive it in India or link it to an Indian business, this income is not taxable in India. One important point to bring to your knowledge is that if the investment was made in a foreign country and over a course of time an individual falls in the RNOR category, he is still not taxed in India for any of the incomes generated from the investments. He can still invest back in India as an FDI if received in a foreign bank account. Tax implications on non-resident Indians, NRI category individuals are very simple to understand. NRIs are taxed only on income that is earned or received in India. Foreign rental income not taxable in India as it is earned abroad. Foreign capital gains not taxable in India as the gains are realized abroad. For example, an NRI earning 10 lakh rupees in rental income or capital gains from Dubai property does not need to report or pay tax on this income in India as it is foreign sourced. Now that we have understood the individual statuses and implications in different categories, let's come to the question that most Indian citizens ask. The first question is how to bring money from India to Dubai for real estate investments. To ensure the financial independence of the individuals, Government of India extends liberalized remittance scheme provided by RBI, which allows Indian residents to send up to $250,000, which is equivalent to 920,000 dirhams approximately per financial year abroad for various purposes, including investments. One of the permitted uses of LRS is the acquisition of immovable property abroad, such as real estate in Dubai. As long as your remittance stays within this limit, no specific RBI approval is required. If you want to invest more than this amount in a single year, special approvals from Reserve Bank of India are required or can be invested through alternative investment methods with additional approvals or specific investment vehicles under proper guidance from certified consultants. This approval is not automatic and typically involves submitting a request to the RBI through an authorized dealer like banks, along with the justification for the higher amount. However, there are certain common ways to structure your investments without needing it. A bigger investment can be achieved if you plan multi-year investments. Example, buying properties on a multi-year payment plan and seeking equity release at the time of handover. Some big developers in Dubai offer you the multi-year payment plan where you may have to pay 50 to 60% of the property value during the construction. At the time of handover, the client can go for the equity release option in some cases, means taking a loan on the property for the remaining payments at the market cost. This does not exceed more than 50% of the revised property value. In those cases, documentation in Dubai is minimal if the property is ready. The financial institutions offer mortgages, which is paid by the returns you generate from the property. The interest rate ranges between 3.75 to 5.25% on the loan amount. Since the average rental on the off-plan property in Dubai at the time of handover is approximately 10% or 6 to 8% on the ready property, the property pays for itself and leaves some returns for you as well. Another common way is using family members limit. The LRS limit applies per individual and the combined LRS amount can be added without requiring any additional approvals. In this case, the LRS investment size is bigger in nature for a single individual and can be made through gifting. If you invest jointly with family members, each person can remit up to $250,000 in the same financial year. Immediate first relation family members such as spouse, siblings, parents, and children can participate in the investment either as joint buyers or by appointing a nominee within the family. This way, you can use your annual LRS limit for bigger investments. Developers in Dubai give you different payment plans for periods ranging from 3 to 5 years to cover the property. Usually, the villa price in Dubai starts from 4 million dirhams to 10 million dirhams on an average. And with the help of professional consultants, these properties can be bought easily and even more easily when family members come together as joint buyers or nominate a representative. I want to emphasize that the funds acquired through LRS cannot be invested into speculative segments like stocks and financial markets without RBI approval. Now, many clients from India also ask me this question: can I use borrowed funds from India to purchase property in Dubai? And what are the FEMA restrictions? This is an important one because the rules are strict to prevent misuse of foreign exchange. The bottom line is no. Loans acquired from financial institutions, borrowed money, or bank limits cannot become a part of LRS without approvals. Generally, they are not approved. Indian banks usually do not offer loans specially for buying properties overseas. However, you can take a personal loan or use other general borrowing options in India and then use that money to buy property in Dubai. Now, if you already have funds abroad, for example, income earned while you are a non-resident Indian or assets inherited from someone residing outside India, you may use those funds to purchase property without remitting money from India. Again, this is also subject to FEMA compliance and proper documentation. This brings us to another big question. What about the tax collected at source? TCS on foreign transactions under LRS. Is that money gone forever? Or can you claim it back? Let's break that down next. So for your relief, the TCS is deposited with the Income Tax Department. When you file your income tax return, you can claim it back as credit. If there is any excess, it will be refunded. No prior RBI approval is needed if you stay within the $250,000 cap, and the remittance can cover purchase price, registration, maintenance, and everything. Now that we have classified the financial and tax aspects, let's move to another important question. Can Indian nationals legally own property in Dubai, and under what conditions? Yes, Indian nationals can legally own property in Dubai. They can purchase freehold properties in designated areas without a residency visa. They must be 21 plus with a valid passport, comply with India's FEMA for fund transfer up to $250,000 per year under LRS. Register with Dubai Land Department, pay 4% registration fee. Compliance with UAE and Indian law is required. It is important to note that Dubai offers both freehold and leasehold property categories. Freehold gives you 100% ownership for an unlimited period of time, while leasehold restricts ownership to a fixed term. Also, certain areas in Dubai are off limits to foreign buyers. This naturally leads us to the next question. Can Indian companies invest in Dubai? If you're operating through a company, Indian business can invest in Dubai under the Overseas Direct Investment route, which allows up to 400% of company's net worth without prior RBI approval. This includes real estate and business investments, but sectors like banking, commercial, real estate, defense, telecom, and media may require RBI clearance due to strategic sensitivities. To invest in Dubai real estate, an Indian company can set up a local entity in a free zone or the mainland with appropriate license, such as a real estate development license. Funds are transferred legally through authorized banks in India, ensuring FEMA compliance. The Indian company can be a parent of Dubai entity or vice versa. If India is the parent, compliance is simpler and profits can be repatriated but will be taxed in India. If Dubai is the parent, profits can be retained offshore, offering global expansion and tax efficiency, but with more complex setup requirements. Once you have invested and acquired property in Dubai, whether as an individual or through a company, the next important question comes: what happens to your property after you are gone? And can you make a will in Dubai? The answer is yes, and always make a will, or else the Sharia law will apply. Making a will is what you can do, especially if you live here long-term or own property. There are two main types of wills recognized in the UAE: the DIFC will and the Dubai Court will. Both allow you to decide exactly how your assets should be passed on after you are gone, but they work a bit differently. The DIFC will is usually the go-to option for non-Muslims, especially expats. It's written in English, follows common laws similar to what you would find in countries like India, UK, or US, and it lets you apply the laws of your home country. This is super helpful if you want to avoid inheritance rules. DIFC will cover all your assets across the entire UAE, not just Dubai, and the registration process is pretty straightforward. On the other hand, the Dubai Court will work for both Muslims and non-Muslims, and it follows the UAE law, which means Sharia law will apply by default, especially for Muslims. You can still use it to protect your assets, but for non-Muslims, it might require extra steps or careful wording to make sure your wishes are followed. It's usually written in Arabic, and you will need to get it notarized and registered with Dubai courts. So which one should you go for? I would say if you are a non-Muslim and want full control over who inherits your assets, especially if your family setup is a bit unique, the DIFC will likely be your best bet. But if you are a Muslim or you are comfortable with the UAE inheritance laws, then the Dubai court will work as well. It even lets you give up the 1/3 of your estate to people outside your family, like friends and charities. Either way, it's really important to get legal advice before drafting your will. A lawyer can help you to make sure everything is done properly so your loved ones do not face any legal issues or delays later on. After understanding how individuals and companies can invest and structure ownership in Dubai, the next logical question is, can a family office or family trust be set up in Dubai to manage multiple properties and investments? Yes, a family office or family trust can be set up in Dubai to manage multiple properties and investments together. It will provide a structured approach to wealth management, asset protection, and estate planning for families. Free zones like Dubai International Financial Center and Dubai World Trade Center provides clear pathways for establishing those structures. In fact, Dubai is one of the favorite places for these kind of structures like trusts or foundation because of no tax complications, strong asset protection laws, regulatory support, and the global recognition of the free zones. Following the discussion on setting up family offices and trusts in Dubai, another question I often get is what bank accounts ROR, RNOR, and NRIs can hold, and what's the process of opening a local bank account in Dubai. As an ROR, if you have foreign currency assets or earnings from previous non-resident days, you are eligible to open and maintain a resident foreign currency account, which allows you to hold funds in foreign currency even after returning to India. As an RNOR who enjoys transitional benefits after returning from non-resident status can continue to maintain resident bank accounts like any other resident. However, you too are allowed to open RFC accounts, which provide the flexibility to retain foreign currency incomes like rent, pensions, or investment returns without being subject to Indian taxation for a limited period. As an NRI, you can open and operate 3 specific types of non-resident accounts. NRE, non-resident external account to park foreign income in Indian rupees, fully repatriable and tax-free in India. NRO, non-resident ordinary account for managing income earned in India like rents, dividends, or pensions. This account is taxable in India and subject to repatriation limits. FCNR, foreign currency non-resident account for holding term deposit in foreign currency, protecting against exchange rate fluctuations and enjoying tax-free interest in India. Whether you are a UAE resident or a non-resident, it's doable, but the options and requirements differ. Dubai banks like Emirates NBD, HSBC UAE, and RAK Bank are popular among Indians due to their strong ties with Indian banking. If you are a UAE resident, this is the easiest. You can open a current or savings or even joint account. If you are a non-resident, it's still possible but more limited. Usually only savings account, no checks, limited services, and you must visit Dubai in person. A very common follow-up question I get is, do I need to declare a Dubai bank account holding rent or sale proceeds in my Indian tax filings? Under Indian law, all foreign assets, including bank accounts, must be reported to Schedule SA of your income tax return, even if the account was inactive or held only part of the year. Any income from that account, like rent or profits from selling property, must also be reported and will be taxed as per your income slab. The NRIs don't need bank accounts to be declared. Next is there any tax in Dubai for rental income and capital gains? Imagine this. You earn rental income from a flat in downtown Dubai. or sell a luxury villa in Palm Jumeirah for profit. And then silence. No tax notice. No income tax returns. No capital gains paperwork. Dubai simply lets you keep it all. Every single dirham stays with you, and for Indian investors, it's a breath of fresh air. Once Indian residents understand the tax-free benefits of owning property in Dubai, the next step is financing, and that's where the next question arises. Can ROR take loans in Dubai to buy properties in Dubai? If you are an Indian resident, you can take a loan in Dubai to buy property. Number of banks in the UAE offer mortgage to non-residents, including Indians, as long as you meet their eligibility criteria like income proof and credit history. Once you have secured financing and made your purchase, another door opens. Can that investment qualify you for the Golden Visa? What is Golden Visa? Can I qualify for the UAE Golden Visa by investing in multiple properties rather than one large unit? Golden Visa is a long-term residency program in the UAE which allows foreign nationals to live, work and study in the country for 5 to 10 years depending on the category. It can be real estate investment, entrepreneurship, and yes, you can combine the value of the multiple properties to meet the minimum threshold, as long as the total value is at least 2 million dirham, that's about 545,000 US dollars or 4.5 crores. This is flexible option for those who might prefer diversifying across several units rather than one large unit. The next thought that often comes up in Indian investors' mind is, how do I pass this on to my family? Can I gift a property in Dubai to my spouse or children? What are the tax implications in both India and UAE? You can gift a property in Dubai to your spouse or children. It is a straightforward way to transfer ownership within the family. However, if the recipients are minors, then there are some additional rules to keep in mind. Just appoint a guardian in the deed to manage until they are adults. There is no gift tax in the UAE, but there is a registration fee. For gifts to immediate family members like spouse or children, it's reduced to 0.125% of the property market value. In India, the gift itself is fully exempt from tax for recipients if it's from you to your spouse or children. So no tax on the property value. The next thing investors mostly ask is, can I freely convert AED to INR and repatriate profits without restrictions? Are there any bank limits or threshold? On the UAE side, you can easily convert AED into INR at banks, money exchange, or even using mobile banking apps. There is no need for approvals or permission from the government for transferring money abroad. The exchange rate is market-based and you can send money directly to your Indian bank account through a wire transfer. On the India side, India allows you to receive any amount of money from abroad. There is no limit as long as it's legal and declared. If you are an NRI and your Dubai property was bought using repatriable funds like from NRE account, then the full profit can be brought back without restrictions. If it was bought with UAE local income, you can still repatriate freely if it's going into India from abroad. The $1 million per year limit applies only when sending money out from India's NRO account, not for foreign property profits coming into India. The next question is about ongoing income, especially rent. How can you receive rental income from Dubai in India, AED account transfer, INR credit, or remittance structures? You can receive rental income from your property in Dubai into India through several methods. One common way is by collecting the rent in your UAE bank account in Dubai and then transferring the funds to your Indian bank account via international wire transfer. The amount will be converted to Indian rupees at current exchange rate during the transfer. Some banks and remittance services also offer the option to credit the rental income directly to your Indian account in INR, which simplifies the process and avoids the need to manage a foreign currency account. You can also use the structured remittance platforms like Wise, Western Union, or bank-based services that offer competitive exchange rates and faster processing. The next step is managing your property, especially if you're not living in Dubai full-time. Can I appoint a power of attorney in Dubai for property purchase, sale, and tenant management? Yes, you can absolutely appoint a power of attorney in Dubai for handling property purchases, sales, and tenant management. It's a common and practical tool for Indian nationals or NRIs, especially if you are not always in the UAE to manage things for yourselves. If you are thinking beyond residential property, can I invest in commercial real estate like warehouses, offices, schools as an Indian national, and are there any additional permissions required? As an Indian national, you can invest in commercial real estate such as warehouses, offices, and schools in Dubai, provided the property is located in designated freehold areas where foreign ownership is permitted. There is no specific restrictions or additional permissions required only because you are an Indian or from any other nationality. You are treated equally under the UAE real estate laws. However, certain sector-specific considerations apply, particularly for properties like schools, which may involve regulatory approvals if the investment extends to operational aspects rather than pure ownership. Warehouses and offices are straightforward investments. You can buy, own, lease out, or sell without extra permissions as long as the property is in a freehold area. No operational licenses are needed if you are just owning and renting. For schools, you can own the building or land in freehold areas as an investment. However, if your investment involves operating the school, like running educational services, additional approvals are required from the Knowledge and Human Development Authority (KHDA) in Dubai. Pure property ownership for rental purposes does not require KHDA approvals. After exploring residential and commercial investments in Dubai, many Indian investors start thinking bigger. Can I diversify my UAE real estate portfolio across multiple Emirates, and are the rules consistent across Abu Dhabi, Sharjah, etc.? The good news is yes, you can absolutely diversify by investing in properties across different Emirates like Dubai, Abu Dhabi, Sharjah, Ajman, and Ras Al Khaimah, as long as they are in areas allowing foreign ownership. However, the rules aren't fully consistent across Emirates. Each has its own land department and regulations, with variations in foreign ownership types like freehold versus leasehold, eligible areas, and sector specifics. No extra permissions are needed beyond standard due diligence, but always verify with the local authority. Let's end this video with today's one final, most important question. Is investing in Dubai real estate actually worth it for Indian investors in 2025 and beyond? Yes, and I say this from the real conversations with people I know. Dubai lets foreigners, including Indians, own property in almost all areas, so you actually hold the deed that matters. There is no personal tax or capital gain tax on property here. So 100% of the rent or profit you earn stays with you. In Dubai, rental yields commonly range from 9 to 13%, while in many Indian cities, yields are often closer to 2 to 3%, and that gap is significant. Dubai is just short flight from India. Many families I work with treat it like their second home. This convenience makes owning property here practical, not just profitable. Some investments can also help you to get residency, which adds flexibility for work, schooling, or longer stays. Here's what I recommend. Move money legally. Use LRS if you are a resident or NRE NRO routes if you are an NRI. Keep paperwork clean. Follow FEMA rules and register your title with Dubai Land Department. Protect your family. Consider a DIFC will or a simple trust to make inheritance easy and avoid surprises. Do not put all eggs in one basket. Spread investments across Emirates to balance returns and risk. Repatriation is straightforward from the UAE. Indian residents, just remember to declare foreign assets in your ITR. I'm Indian and I have seen real families benefit from Dubai property not because of the hype, but because it fits into their lives. Short trips, school options, shopping, and solid rental income. I have answered as many questions as I could without turning this video into a Bollywood movie. If you think I missed something or want more detailed personal answers, call the number shown below today. If you want clear, practical help for your family, money situation, and long-term goals, reach out to me. I will explain the steps simply, cut through the confusion, and help you make a plan you can trust. Signing off, Archana Bhan.